Did you know that Tesla will get to $10 trillion soon, according to an expert? Despite numerous and seemingly endless bearish claims, others still believe that Tesla is well on its way to becoming one of the most valuable companies. You really would not want to miss this one. Tesla is facing unprecedented demand. Everybody I know at Tesla, and with whom I could discuss that topic, agrees that demand is way above what hopes were a few years ago. Electric cars are so popular that for Tesla and their competitors, market shares will mostly be dictated by their ability to ramp volumes, noted Wall Street analyst FERRAGU. In fact, despite the significant price increase for its electric vehicles this year, there have been many indications that Tesla is experiencing strong demand. There were reports that Tesla's older rate surged to record highs in the US when gas prices went up earlier this year. Tesla even stopped taking orders on some versions of its vehicles because the backlogs were becoming too long. When FERRAGU participated in an event for analysts at Gigafactory Berlin, the analyst seemed most impressed with how efficient Tesla's operations are at Giga Berlin. In a note to clients, FERRAGU wrote, "Compared to Fremont, Berlin is visibly much more efficient. Logistics inside the factory are much simpler, eased by ducts surrounding the fab from all sides and ensuring parts come in at the right place in the manufacturing chain. The single manufacturing line is designed for a cycle time of 45 seconds and will deliver 10,000 cars per week at full capacity. On a side note, it takes just above 5 full days non-stop to do 10,000 cars at 45 seconds per car, so this target accounts for a healthy 25% downtime. Most importantly, cars are manufactured today with a rear casting and will shift to rear and front castings as soon as the 4680 structural battery packs will be available. As of late August, FERRAGU has a price target of $530 on Tesla stock, which represents a significant upside on the current value of $275 a share. Long term, FERRAGU even sees a case for Tesla being worth $10 trillion by 2030. But that's based on the automaker achieving its goal to produce 20 million electric vehicles per year by then. For comparison, that's about 4 times Apple's current valuation. Other experts share FERRAGU's outlook of Tesla being worth $10 trillion, although some were very conservative and said that Tesla could be a $10 trillion company in 20 years. Quite a difference in timeline, especially since FERRAGU believes it is possible by the end of the decade. In a recorded episode, Fool.com contributors Matt Frankel, Brian Withers, and Jason Hall discussed the chances for Tesla to become the Amazon of energy. I like Tesla. I think it's a fantastic product. I think Elon Musk has done more to transform the car as anybody since Henry Ford, says Matt Frankel. Frankel added that Tesla will indeed become the Amazon of energy in 20 years, and it will be providing the solar panels for like half of the American homes. If everyone has a Tesla vehicle in their garage, if everyone has the battery pack that can run your house, if everyone's using their charging network to power their cars, regardless of what brand they are, there's a case to be made that this could be a $10 trillion company in 20 years, says Frankel. Brian Withers shared, "I think over time Tesla is going to become a tech company, more than just a car company. As we're voting over the next 20 years, I'm comfortable to say that that could happen more in 20 years than more in 5 or a decade." Other experts, on the other hand, believe that Tesla is positioned to become perhaps the first company with a market capitalization of $10 trillion in the far future. Several radical innovations were pointed out to be the cause of this expected massive development. Well, Tesla undeniably has some very significant innovations, like the robotaxi and humanoid robot Optimus, to name a few. Tim Davies of Holland Global Investments, a next-generation asset manager and Web 3.0 data storage provider, said that Tesla is on the road to a $10 trillion company and beyond. In the latter part of 2021, Holland conducted a unique study into Tesla's potential, including building a 30-year demand model for global electric vehicle sales that has revealed a massive upside in the company's shares. According to him, Tesla will dominate a massive market for EVs for the next 3 decades. According to Davies, rising manufacturing capacity and profit margins will allow Tesla to continually cut EV prices and capture additional market share at the expense of traditional automakers late to the EV opportunity. Moreover, the study showed that the integration of solar with battery storage and EV transportation into a single product is unique to Tesla, offering a Sydney family of 4 a total savings of $70,000 Australian dollars over 25 years NPV on electricity and petrol bills. This is enough to purchase 2 Tesla vehicles over a 25-year period. Davies forecasts Tesla's total vehicle production to surpass 34 million vehicles per year in 2040 and peak at 45.6 million in 2049, with its combined revenue from car sales, software updates, and energy system sales surpassing $3 trillion per year from 2047. Tesla will also generate a free cash flow of $500 billion per year from 2037 and surpass $1 trillion per year from 2047 onwards. Davies believes that Tesla will return $5 trillion to shareholders over the next 30 years through shareholder dividends starting from 2025 and regular share buybacks beginning in 2035. That said, he believes that Tesla will amass a long-term investment portfolio that will surpass $10 trillion by 2050. Again, quite a leap from other experts' timelines. Davies' analysis has found Tesla's valuation and the share price has significant upside from current levels. Davies values Tesla at $3,369 per share using a discounted cash flow valuation approach, giving the company a potential market capitalization of $3 trillion, making it the world's largest company. That valuation increases to $6,244 per share in 2030 and $9,056 per share in 2040. However, note that these forecasts were made almost a year ago, and Tesla has had several significant changes from then, as well as the recent hitch in production once again brought by the lockdown in the Shanghai factory. For years, there was reportedly no demand for Tesla's EVs. People didn't want EVs, the demand had fallen off a cliff, and bankruptcy was looming. However, in reality, the demand is growing like crazy, and that has been the case for many years now. Again, according to Wall Street analyst FERRAGU, Tesla is facing unprecedented demand. While automakers across the globe struggle to get parts and produce cars, Tesla has been able to continue to show consistent successes with regard to production, deliveries, and profits. Tesla is raising the prices on all of its models often, and people are still placing orders much more quickly than the automaker can fill them. Add the fact that gas prices have soared, and it's also difficult to get most rivals' models, and Tesla is in a uniquely positive position. In fact, after relying on 4 models for its rapid growth, Tesla says it will finally deliver its promised Cybertruck pickup, roadster, and semi, and maybe an autonomous taxi and humanoid robot. It can be noted that Tesla has achieved remarkable growth in recent years with just 4 vehicles in its lineup: the Model S midsize sedan, the Model X midsize crossover, Model 3 compact sedan, and Model Y compact crossover. When the Semi, Cybertruck, and Roadster are finally released, experts believe that Tesla's sales and the stock price will hit the roof. According to UBS analysts, Tesla's future is brighter than ever, thanks to 3 key reasons that should help Elon Musk's electric automaker rebound after a brutal 38% sell-off this year, fueled by shutdowns, shortages, and a broader tech slump. The first piece of the puzzle is record demand for its cars, leading to record backlogs. Indeed, buyers need to wait a year or more to take delivery of some Tesla models. The analysts also pointed to Tesla's 2 new factories in Germany and Texas, which are ramping up production and should roughly double the company's production capacity over time. They expect the new plants and Tesla's pricing will help keep the company's automotive margins above 30% for quarters to come. Looking forward, they argue that Tesla has an edge over the other players when it comes to sourcing critical components like semiconductors and batteries. UBS thinks batteries will be the next industry-wide bottleneck, and that Tesla will outperform rivals by building cells in-house and maintaining better access to raw materials like lithium. Elon Musk's structurally superior supply chain will allow Tesla to grow faster and more profitably than legacy automakers, UBS says. Subscribe to this channel to know more about how Tesla will soar soon.